Hi guys, hope everyone's well. I've got a short video I recorded in Buenos Aires for everyone today. It's for those of you interested in interpreting a very basic geological cross-section from market releases of junior mineral exploration companies. And I've also got a basic run through of the Appendix 5B quarterly releases on the ASX. These are very important because they provide the financial health of a company, how much cash do they have, their outgoing expenses. It's important to look at these, the latest one of these before investing in any junior exploration company, and it'll help you determine the timing of investing your money. So I hope you guys enjoy that. Thanks.
Why do I invest in these risky stocks? So I worked most of my 20s as a geologist in the Australian mining industry, and that was mostly in mineral exploration. As a hobby, I like to read through ASX releases just to see if they know what they're talking about geology-wise. Part of my job in the industry as a geologist was to write these releases. So I like looking through other companies' releases of drilling results and assays and projects just to see if they do know what they're talking about based on my experience of the same thing. I've got a little bit of a track record of doing well out of this. I've made 2 to 5 times my money of some of these ASX names here. But I've also rode a stock from about $1 down to administration, which was Gascoigne Resources. So that's what can happen with investing in this space. It's extremely risky and volatile. And yeah, I would never recommend having a huge portion of your portfolio allocated to this space. Just going to go through how to read a basic geological cross-section, which is very important. So these are usually associated with ASX announcements regarding drilling and exploration updates. So here's one from Kingfisher Mining, which is a small cap rare earth explorer in the Gascoigne. And they've put a cross-section on this release or announcement from the 25th of October 2022. So basically a cross-section is a 2D slice of the drill line of one particular drill line of a whole drill program. So they've got how many holes here? They've got about 6 holes on this cross-section here. It's a very good cross-section, I think, because it's very simple, and these are aimed at the general investor, and they're not aimed for a target audience of geologists. So it's the geologist's responsibility to construct these in a way that the average investor will be able to interpret them. In saying that, the average investor investing in this space does need to have a little bit of background in reading these reports. So if you are going to invest in this space, make sure you do start by educating just some basic geological knowledge regarding assays and whatever commodity that you are choosing to invest in. So this one's rare earths. Every cross-section needs simple, but they need a scale bar, a legend, and needs to clearly define what's depicted on these cross-sections. So this one with Kingfisher, they've got a whole ID there, which is, I think it was Mick Well RC, which is reverse circulation, which is a type of percussion drilling. So it's basically a huge drill rig that just hammers into the earth and collects samples every 1 meter interval. And on this particular drill line, they've defined a nice blanket of mineralization in the clay. So this is really flat-lying mineralization. One thing you want to check with these is that their intercepts that they're reporting here in the call-outs match the interpretation in the light red here. So you want to make sure that they match going forward. They're not just interpreting some bullshit min zone that doesn't exist. So make sure that whatever they've reported here against the drill hole matches this light red interpretation. These open signals here mean that mineralization is open to the east and west here. So one thing I should say is that these drill holes are drilled along a common northing coordinate, and you can tell that by the changing eastings depicted down the bottom here, which is common northing and then eastings along a magnetic coordinate system that they use for reference, because you are out in the middle of nowhere with these where there's only GPS available. So they use a magnetic coordinate system. So yeah, make sure that these intervals are worthy of your money or investing into this company. So check out the thickness by looking at the The thickness reported in these callouts, so 36 meters is a very thick interval, 779 ppm, total rare earth oxide. So whatever commodity you're wanting to invest in, make sure you do a little bit of background research to see if these intercepts are adequate and they are decent. There will be a lot of text associated with these sections, geology-wise. So the geologist who's constructing these reports and announcements will explain the cross-section in a whole heap of text, and they should do it in a simple way so that the average investor can understand it. If it gets too complicated and you can't understand it, it's, in my view, it usually means that they're onto nothing. So they're realistically, they should be talking about just the mineral they're exploring for and making it really clear how much of that they've got and the potential going forward. If they're off on tangents talking about geology and something unrelated to the mineralisation, have a second look at them to see if they are. They do actually have something worth investing in. I've just got comments on here. Look at the thickness of the mineralised intervals. So I've been through that. Is the mineralisation closed off or open, down dip and along strike? So this is still open. They've got this represented here by these open signs. And how long is the drill spacing? So that's very important. So using your scale bar here, what's the spacing of these holes? That's around 100 meters. Can you interpret the mineralisation between drill holes? So that's what they've done in the light red, and I think they've done that quite well. A little bit of a gap in here, but it's not to worry because they've got mineralisation all the way through here in this hole and here through this hole. So they've just interpreted that in like a up to the surface, which is fine. Yeah, relatively simple cross section. This one, not too complicated geology wise. They've just got mineralisation in the clay. It looks like nothing in the bedrock. One of the main things I look for with junior explorers is how much cash do these companies have? It's very important to avoid capital raises and that therefore dilute your share. So the way to do that on the ASX is these Appendix 5B releases every quarterly. You can basically find them on by typing in the stock to Google, going on ASX announcements, and then finding this Appendix B label from their ASX releases. And the basic way to interpret these is look at the outgoing costs. So anything in brackets is an outgoing cost. That's basically to keep the lights on, to pay the staff, and any exploration activities that they're spending money on. So that'll all be represented here and in brackets. And then check how much cash they have in the bank. So that won't be in brackets, and it'll be represented in this section of this Appendix 5B. And this is Kingfisher again, and they have 5.3 million at the end of the last quarter. And basically my way I look at this is anything below 2 to 3 million, these junior explorers are likely to do a cap raise in the near future. So be very careful investing into a junior explorer that is very low on cash at the end of the quarter. So check this out. Use a buffer of about 2 to 3 million as a way to see if they're going to raise capital soon. So 5.3 is plenty, so they can get plenty of drill programs out of that. And I think they won't, Kingfisher in this case won't be raising until after the next drill program in April. So takeaways from this: good management teams with proven track records. How much cash do they have in the bank? Are they likely to raise capital soon? And what's their forward plan to add value to your shares? What's their plan to drill? What are they targeting? What's the size of the drill program up and coming? Are they going to do any geophysics, which is a whole other section of this that I won't get into? What is their forward-moving plan to add value to the shares? And as an investor that doesn't have a geology background, I think it's important just to get a little bit of that knowledge. So when you're reading through these reports, make sure you can interpret their cross sections. As an investor, not a geologist, so just look at the intercepts. Basically, stuff I went through on that slide at the start. Just use very basic knowledge of that to see if they are talking about the mineral they're exploring and not from tangents, talking about irrelevant geology. And the way to narrow down your search with all these junior explorers is to pick a sector with good fundamentals. One thing I should mention is there's a heap of these explorers out on the ASX and TSX or whatever. There's just so many of them, and most of them are never going to make any money. So pick a solid fundamental sector and then start your search for a junior explorer. From there, that is the best advice I can have to prevent yourself from wasting too much time on companies that aren't going to make money if they're in a sector which has very poor fundamentals. And the biggest takeaway, never all in, allocate a certain percentage of your portfolio that you're completely comfortable to lose if the stock tanks. So yeah, be prepared to lose all your money with these stocks. They're very high risk, and it can easily happen, as it's happened to me with Gascoigne Resources. And yeah, just be prepared to lose all your money if you are investing in these stocks, basically. But the risk reward can be huge if you do get one. That's all I've got today. Let me know if you have any questions. Thanks very much.